What is alternative asset investment? In this case, our focus is real estate. What if I tell you how to legally, without paying any penalty, following the IRAs code, you could invest your entire 401k IRA funds to purchase real estate and become investor? Don't go away. This is as much relevant to a 25 years old young professional to a 55 years old and more age group. I will show you in this video. My name is Rizwan Pasha, and I'm a real estate broker and investor in Mountain House, California. The first question people have in their mind is this legal? When we talk about using IRA, which stands for Individual Retirement Account, or in some cases 401k funds, in-service withdrawal, if you are 59 and a half or over, to purchase real estate without paying any penalty, because majority of the people really do not have knowledge about the options to use their own money from 401k or IRA funds. At this point, you may be thinking this is for old folks who are close to retirement and this topic is not relevant for you. Hold on, you haven't heard the whole story yet. I promise this will get interesting for you as well. This is one of those investment hacks the major financial services or investment management companies like Fidelity and Charles Schwab will not promote for many financial reasons. If you take your money out of their portfolio, they will not make the commission. That is the simple fact. This information is eye-opener for many people who have never heard about this option. There are so many options, but I will focus on just two scenarios. I will break it down in a very simple and a layman terms. How do I know about this? In short, when I left United Airlines in 2009, I had 401k funds and I wanted to invest in real estate instead of traditional stock and bond investment. I educated myself, and after researching and reading a lot of material, specifically Matt Sorensen's book, The Self-Directed IRA Handbook, helped me understand the whole concept. Matt made it relatively simple, this complex topic. If you follow the IRAs rules, it is rather straightforward. However, this is a complex topic and you can't do it as an DIY, do-it-yourself project. You need someone to guide you and walk you through the whole process. There are good resources out there who will help you invest by following all the IRAs rules, what is allowed and what is prohibited. My first investment property I purchased using my IRA funds was in 2011. Since then, I have flipped 2 more properties. Just know that when purchasing the property using your IRA funds, you and your immediate family and some other relatives cannot live in this property. That is one of the IRAs rules you have to follow. I want to keep this topic high level and you can educate yourself about what is considered prohibited transaction and why one should avoid them. There are heavy penalties if IRAs rules are not followed. The reason why this topic is equally relevant and important for the younger generation is, on average, the median US population professional job tenure is around 4.2 years, according to the Bureau of Labor Statistics. So the question is, why this fact is relevant to this topic? This is a golden nugget. Once an employee leaves one company and joins the other company, their 401k from the older company is unlocked from the previous company's regulation. Meaning now the once 401k plan you had could be converted to traditional IRA on employee's instruction. Even though your age could be 20, 30, 40, it does not matter. And now you can invest that money by taking that money to third-party custodian. Now you will take that traditional IRA and convert this to a self-directed IRA by transferring the funds from your older 401k or IRA to third-party custodian who specializes to deal with SDIRA. There are a handful of good companies which are providing these services. A self-directed IRA, SDIRA, is a type of individual retirement account, IRA, that offers greater investment flexibility compared to traditional IRAs. While a traditional IRA typically limits investment to stock, bonds, and mutual funds, a SDIRA allows you to invest in a wider range of assets, including real estate, precious metal, and a business investment. There are so many young professionals who have changed jobs and they don't know they have this option to add the real estate and diversify their IRA investment portfolio. I have a couple of scenarios. Scenario number one, you could become a lender by issuing the note to other people who have either short-term need for 1 to few years at a lot higher interest rate compared to traditional market interest rate offered by the banks and the mortgage companies. Just like mortgage companies, your promissory note is secured by the property. Make sure your note is on the first position to secure it. Like anything in life, high risks bring the high reward. There are plenty of investors who would rather go to this route than to get the bridge loan from the banks. The due diligence to whom you will issue the note is very important. Although the note is secured by the property borrower will put as a collateral. Let's talk about scenario number two. Invest in real estate. This could be achieved by pooling the IRA funds with other like-minded investors, friends, colleagues, and community members instead of going to conventional route and getting the loan from the bank. Here is an example. Let's take the scenario. There are a group of friends or investors who have the money in their 401k IRA due to job changes in the past, and they would like to purchase the investment property. Remember, the property will be purchased under the IRA name, not any person's name. They have the options. Custodian can write the check to purchase the property or create an LLC and open checkbook IRA account. This way, the designated managing member of the LLC, when you create the LLC, all the partners in the group would have the share equal to the proportion of their contribution. Example number one, 5 friends or the investors, each contributing 100K for the total of 500K each, would be 20% owner of the LLC they have created. Percentage is divided equally based on the contribution. Example number two, 2 investors investing 600K. Investor A contributed 400K and investor B contributed 200K. Their respective percentage share in the LLC would be 66.7 for investor A and 33.33 for investor B, equal distribution of percentage. This example shows if the property cost is either 500 or 600K, the group of investors can pool the self-directed IRA money and can purchase the property without going to a conventional bank for the loan. This is just a tip of the iceberg. What could be done with this option? There are many more details how additional funds could be added to the contribution to the group of investors. The goal for this video was to share what is possible using alternative investment assets strategy. For one-on-one consultation, please reach out for your free consultation. I am preparing the list of interested investors to connect them with each other so they can pool the money to purchase the property for investment. Please reach out and share your information via email in the description section or fill out the form.